Okay, so in this video, I'm going to explain the financial forecasting and financial projection models. We want to know exactly that what are these, what are they used for, when do we use them, and practically what is a template that could be useful for us for having a great financial projection for our company. So let's know a little bit about the basics of financial projection and financial forecasting. When you want to start, when you want to predict that what will happen in future to your company, you are always dealing with four different type of documents. One of them is called income statement, that shows the path of revenue in your company. So it starts with the revenue and it ends with the net profit or net income that your company has. After that, you're dealing with something which is called a statement of retained earning. It shows that out of this amount of profit that your company makes, how much will go to your pocket and how much will be retained in the company. The next one is the balance sheet that shows a snapshot of the financial practically picture of the company. And after that, you're dealing with something which is called the cash flow statements. And this is one of the most important documents that you will need. It will show you exactly that based on the amount of the money that you put in the company yourself, or the amount of the debts that you got from different sources like banks and creditors and so on and so on. And based on the amount of the incomes that you had, how was the assets helping you in making the money out of your efforts and out of your practically resources. So uh, the question is that when you need the financial projections, and the answer is that whenever you are going to check the health of your company, or whenever you need to predict the next year's cash needed, or whenever you're dealing with a creditor and you want to, or practically equity investor, and you want to raise an amount of fund. So these are the three times that you need the forecastings. We have a simple, very good, easy to use template developed, which can be used by the financial experts. And right now, I'm going to take a look at the template. This template is used for financial experts. So I believe that it is good if your CFO or financial practically accountant or whoever who has the knowledge uses this. This starts with the pre-assumption that when you are going to raise a fund, it is mostly for the startups. How much was or is the initial setup cost for your company? How much was the fixed assets needed? How much was the operational capital needed? And what are the sources of the funding that is appropriate for you? How many percentage of the equity you want to have? How many percentage you want to get from the loans? How many percentage you want to get from your investor, and so on. The next important thing is the payroll. How many staff do you have? How many of them are part time? How many full time? How many of them are freelancers or independent contractors? And based on that, how much should you pay for Social Security, Medicare, and so on and so on? And based on that, we will come up with a 12 months estimation of the whole amount of the costs that you have in that case. Then we will extend it to year 1 to 3. After that, we are going and checking that what are the main packages of the products that you are selling. And each of these packages, how much profit you have, how much is the cost of the sales. And based on that, we can come up with an estimation of the amount of the revenue that you are going to make in not only the first year, but the next 3 years. Additionally, we need some other improvements, other practically inputs for the information, like how much is your account receivable, how many days is your account payable, What is the line of credit assumption? What is the interest rate of your line of credit? What is the additional fixed asset that you have to buy in the period of 3 years? And based on that, we can come up with our cash flow statement for the first year, cash flow for the first 3 year, income statements for the first year, income statement for the first 3 year, the balance sheet of the company, break-even analysis, financial ratios, which are an important, part of the business in order to be sure that your business is healthy or not, and some diagnostic, tools. We will provide you with the information that is it, accurate enough? Are your assumptions correct or not? In addition to that, we have a tool for calculating the cost of goods sold and also the amortization and depreciation. So I believe that whatever you need is provided in this template. As long as you can use the template, it will be a very good source for you to have a great forecasting system developed for yourself and for your company. And for sure, this will be something that the output of that would be a wow for your investors.